Hi, I'm John Hardy, Head of FX Strategy with Saxo Bank. I think in Q4, if we're looking at the Eurodollar, of course the super major of super majors in the currency market, what we're looking for is for the market to get over this selling of the dollar on the idea of an infinite QE and buying the euro on the unwinding of the fear over the EU breakup, looking for that to turn around somewhere in this 130 to 135 area. Looking to sell it there. Certainly if we see Eurodollar above 135, we need to change the scenario, but looking for it to head lower and adding to positions if it transitions below 125, which was the key level it broke on the way up and was the beginning of the trading season after the summer, first week of September. So if we're breaking through there, full reversal signs in, and then looking for those new lows in Eurodollar below 120. Coming into Q4 this year, we've seen the Eurodollar coming up higher again as all of these tail risks related to the EU breakup have been unwound, and the extremely heavy market positioning has been unwound as well, at least to a great degree. Now there could be some residual unwinding to take place, this whole sort of buy the euro back because wait, maybe the EU will stay together trade may come into play. But actually I think if we look further out, this is not a reason to buy the euro. In order for the EU to stay together and for the periphery to revalue, we're going to continue to need to see massive liquidity in the system, effective quantitative easing from the ECB, etc., and this will prove euro weakening once again. And I really don't think we can write off the whole idea of stresses surrounding the whole EU political framework in the first place. So this emergency, the crisis, if you will come back to haunt us again. At some point in Q4, this process will begin anew, as it has ever since the middle of 2010. Meanwhile, on the dollar side of the equation, I think the market will realize that this Fed's promise with QE3 to extend the printing of money, essentially ad infinitum, will prove to do little for the economy as we worry more about the fiscal cliff and we see risk appetite pulling in its horns again. That will be dollar supportive. So Eurodollars to turn around somewhere in the 130 to 135 range, head back lower to those lows we saw over 2012.